Hello everyone. Let's talk in detail about Shankar Building Pro. So, we all know everyone looks for a small cap company that could grow up to be a behemoth. Shankar Building Products could turn out to be just that. Available at 1200 market cap, the company 1200 crore market cap, the company is generating revenue over and above 5000 crores by now. Targeting a 10x with such a low base is quite possible. If the all over India story continues for the company and the company is able to keep strong balance sheet, because balance sheet is most important, then the playground is filled with people from unorganized sector to be replaced by organized players like Shankar. The company is operating on a margin of 3% currently. This was due to majority of the share coming from steel segment. Majority of them used to sell only steel. And steel in itself is considered to be a low margin product. Selling directly to influencers like builders, architects, the company could hardly manage 1.5 to 2% margin. So no company is able to keep up a 2% margin. Seeking to expand this margin further, the company is putting full force in front towards B2C structure by entering into the home improvement market. So the sanitary ware, tiles, electricals, PVC pipes can improve the margins further as the sector directly targets consumers. These consumers who are eyeing for branded makeover of their home. As India adds another trillion to its GDP, the consumer interest in luxury segment is bound to improve. According to Motilal Oswal study, every trillion adds 10x to the revenue in the luxury segment. Every trillion. This would in turn directly influence Shankar's top line growth. So, seeking the geographical expansion in the future, the company has a lot of ground to cover. We need to keep an eye on debt side of the balance sheet. If the story continues, we could see a DMart in construction segment. The business is well diversified into three segments: marketplace, super rich, value adding processing unit, this is complementary to marketplace, and manufacturing. What is marketplace? Marketplace is about to be separated from the pack and DRHP is scheduled in about an year. This particular segment is going to be the most valuable of the lot. Most of the marketplace companies, as you can notice, are valued at a certain multiple of their revenue and not by the real profits. So, fingers crossed for this company. The value adding processing unit is complementary to the marketplace. We all know that because it helps the commodities to be modified according to the specific needs of the influencers. The ingots, steel tubes that arrive from manufacturing facilities of Tata Steel, APL, Apollo are of basic nature because they provide basic structures. All of them has to be modified further into specifications of architects or builders. So this processing unit, though laborious and highly expensive upfront for the company, is able to provide with the satisfaction guaranteed from the returning customers. Manufacturing units are of three kinds. These manufacturing units: Vishal Precision Steel Tubes and Strips, Century Wells, Roofing India. These are three within the company. Taurus Value and Steel Pipes. Advantages through association. The company is getting free use upon the branded names like APL Apollo, Kohler, Jaguar, because it sells their products. Any advertisement on shop billboards, Shankar's name stands right next to these big brands. Being in the business of retailing, this provides a good opportunity to boost prestige and self branding while standing on tall shoulders of these powerful brands. Power of association works wonders, even much more when it comes at a cost of big brands and you are getting it for free and with gratitude like use my name and sell all of my products. Okay, you can use my brand name, just sell my products. Okay, so valuation is a big part of investing. As an investor, buying a good company at a cheaper valuation can make 10 or even 100 baggers. The latest earning multiple suggests with a net profit of 81 crore, the company stands at 1200 crore market cap. This accounts to be 15 times the earnings. 15 times earning multiple is given to this company. The growth in population with the GDP has short consequence of need in housing infrastructure to be built throughout the country. The real growth demands new homes to be built, and with the rise in per capita, the boost in luxury segment at home improvement space is surely going to increase the sales growth. This is where Shankar gets the maximum margins, the luxury segment sales growth. Okay. The index right now, the Nifty 50, is trading at 23 times earnings when Shankar Building Products Limited is available at 15 times. So we can presume that there is a lot of upside real growth opportunity than the downside. Thank you for watching. Have a nice day. See you later.